Hello everyone, I am Pratap here. We are at lesson 29.3.2. That is a part 2 of lesson 29.3. This is about bullish or bearish trade setups for a weekly income trade. So in this video, let us focus on two important points. The first one is performance evaluation of the weekly income trade bullish trade setups we generated during last week. And after that, we will also look into the analysis of bearish trade setups that are generated during this week. During this week means this end of the week, the bearish trade setup stocks that are generated, we will analyze them. Later on, we will see their performance evaluation. Okay. First, let's start with the performance evaluation of the bullish trade setup stocks we generated during the last weekend. So, before we look into the stocks, because last weekend we have analyzed 1, 2, 3, 4, 5, 6, 7 stocks. These 7 stocks are bullish trade setup supported stocks and we analyzed it during last weekend. So, before we look into these stocks, first understand what happened to the overall market during this week. This is Nifty. Nifty talks about the overall market condition. See, this week started with a gap down. Nifty started with gap down on Monday. And how many points Nifty is lost on Monday? 242 points. After that, Nifty moved in a narrow range. Here there is a fight between institutions. Demand and supply are equal on Tuesday and Thursday. Wednesday is a holiday. We have seen the demand and supply, they moved in a narrow range. This is not a base candle. This is a drop candle. The hidden body concepts you learned in lesson 9.3 and 9.4. That way this is a drop candle. These two are base candles. And again, last Friday, what happened? This Friday, prices sharply came down again with gap down. Now, what is the overall market condition during this week? The completed week. The overall market is bearish. It's a bearish market. And in a bearish market, what is the performance of our bullish trade setups generated during the last week? Before that, look into the weekly candle today, you will understand. This is the weekly candle. The weekly candle we opened with a gap down. We have a drop candle, base candle. And during this week, prices came down with gap down. This is another drop candle with a hidden body and pro gap also. That means the weekly supply is very strong during this week. In such kind of situations, what is the performance of bullish trade setups generated for weekly income trade during the last weekend? That is what we discussed in lesson 29.3.1 video. 29.3.1, we discussed bullish trade setups, all these stocks. So let us look into those stocks. Before we look into those stocks, please remember this video lesson you will be able to understand only if you complete our supply demand zone free training. In case if you did not, please go to NeoStock YouTube channel, our channel. At our channel homepage, click on the tab Playlists. Here you can see a playlist, Supply Demand Zone Price Action Course. Click on this View Full Playlist. Go to the bottom of the page. Here starting from lesson 1.1, I kept all the training lessons in an order. So go through all these lessons according to the training plan I specified at our Telegram channel. If you don't know our Telegram channel, I provided the link in this video description. Go to this video description, find the link, join at our Telegram channel. In the Telegram channel, pinned messages. At the top of the window, you can find pinned messages. Click on that pinned messages. There I kept all the training instructions So learn your course according to the training instructions. Then you will become a very good independent trader in the coming months. So once you complete all the training lessons, then you get into the current training video I am discussing. Okay, now let's get into the first one I am going to discuss is Chambal fertilizers. Let me go to the 75 minutes time frame, because entry time frame is 75 minutes. And one more important point you will learn in today's, in this training lesson, the importance of lesson 20 checklist. Why I said lesson 20 is very important, you will understand in today's session. And also you will understand the importance of lesson 16. Lesson 16, you learned a concept when a zone can be violated. Okay. And also you will understand it is a revision especially this particular stock. You will also understand the HLQ zone strategy you learned. That is the intraday strategy. That importance also you will understand in this stock. Of course, we are discussing swing income trades. That is a weekly income trade. Even then, I am going to enter into intraday related at one situation. How HLQ zone's importance you will understand. And moreover, this is 75 minute zone is a 75 minutes HLQ demand zone. See, S_DZ, this zone. I have added the text from our last week's report. Look into the previous video, then you will understand in the report what kind of zones, all these zones. Anyway, marked in all these zones. This is a 75 minutes support demand zone, S_demand zone. So it is a high liquidity zone. And it is a drop candle, 2 base candles and a rally candle, 75 minute zone. And I have drawn week to week I have drawn. And if you want to plan a trade in this zone, the zone should have a fine-tuned 5 minute zone. You may not be taking your trade at the fine-tuned 5 minute zone. You will be taking at type 2 proximal of your 75 minute zone. But then why we are looking for this fine-tuned 5 minute zones? In checklist you learn. Look into the checklist. Is the entry zone having a fresh fine-tuned 5 minute zone? No. Reject the trade. Why? I am saying fine-tuned 5 minute zone is not for the entry purpose. Then what is the purpose? What is that you learned in lesson 16? When a zone will be violated. If a zone is not having a fresh fine-tuned 5 minute zone, there are 80% chances of zone violation. Higher chances. At least 80% level we can say the zone can be violated. Okay, if 5 minute zone is there, what does it indicate, you may ask? Fine-tuned 5 minutes. It is an indication that this could be an institutional order flow, 5 minutes zone. Okay, if that is the institutional order flow, do we need to take a trade exactly at 5 minutes? No. Many times what happens, new order flows might be added before that fine-tuned 5 minute zone. And many retail traders like us, we will also place our orders. Sometimes what happens, the prices may not enter into institutional fine-tuned 5 minute zone. Before itself it started moving up. Just for confirmation that a zone won't be violated, for that only we are fine-tuning up to 5 minute zones. But your entry mostly you will be taking a type 1 proximal or type 2 proximal of your 75 minute zone depending on your risk management. If you feel risk is very high, probably you may take in the fine-tuned 15 minutes level, you may take a trade. These are the different strategies you will use. But fine-tuned 5 minute zone is a confirmation that the zone is having institutional order flow. We have a confidence that the zone may not be violated very easily. Okay, anyway, you learned this in lesson 20 checklist item 4. In case if you did not remember lesson 20, please go through that video once again. Today, anyway, this is not the stock to understand the importance of this checklist item. There are some more stocks are there. Then you will understand how this checklist 4 would have saved your trades from the violation. Okay, first of all, this zone is having a fine-tuned 5-minute zone, multiple zone, fine-tuned 5-minute zones are there. How we fine-tuned? Just see here. The 75-minute zone is having a drop base rally, again rally base rally, the 15-minute zones. And again within that 15-minute zones we have 5-minute zone. We have a rally base rally. Again this is tested. Again this is almost tested. This is acting as a high liquidity zone. And this rally base rally. Failed ERC as a rally base rally. We have 2 order flows. That way we got a confirmation this zone is having a strong order flow. Here also you see, again drop base rally is created. LOTL zone. That is the indication. Here also you see rally, again base rally, LOTL. Now here almost came close. It's as good as just almost reached. See sharply how it moved. So a strong institutional order flow. So many orders are added into this zone. Anyway, we are not planning our intraday trades here. We are planning our swing trades. So that's why your trade may not be at the fine-tuned 5-minute zone. Where you will be planning? At your 75-minute zone. Where is your 75-minute zone? This is your 75-minute zone. Drop to base candles and rally. This is wick to wick. Wick to wick risk might be much higher. Maybe you are reducing here. Still, if your risk is high, you feel you go inside a little inside. The moment you go more and more inside, there are higher chances you might be missing the trades. And moreover, again another 75 minutes LOTL zone is created. Did you notice? Drop base rally. This 75 minutes is the origin. So that's why you want to plan your trade in this area mostly. If the risk is more high, maybe you go for position sizing. Yeah, you will go for position sizing. That way you plan your trade. Anyway, risk management, everything you land. I don't want to enter into those topics once again. Now we are checking the performance of these zones. See, even though Nifty is sharply moved down during last week, entire candle, see, last week candle, drop candle. If you look into the daily time frame, you see how sharply prices went Monday. Sharply. See Monday how sharply it moved down. And moreover, you might have noticed this zone is already tested and again it moved. See, it reached when last week itself. And again price moved up. Last week, the zone is created. After that, prices entered. Of course, at that time, again drop-based rally LOTL zone is created. At that time, it reached all-time high. The blue color line I have drawn was all-time high reached. And again, prices were moving down. Friday, our software identified this zone. And moreover, this 75-minute zone is a high liquidity zone. There are higher chances this zone supports multiple tests. Why? Because all these order flows are fresh order flows. Until both these order flows are consumed, this zone may give you multiple trade opportunities. See, before reaching this first fine-tuned zone, it gave you an offer. It gave you a trade. And again, before reaching this fine-tuned 5-minute zone, Monday, it gave you a trade. See, Monday, see Nifty, how many points were down? Sharply on Monday, Nifty down by 242 points on Monday. And Monday you got the trade. After that you see the rejection. How this zone pushed the prices. Which zone? This 75 minutes high liquidity zone. So Monday you got the trade opportunity. Why we are taking second trade? Because this fine-tuned 5-minute zone, still they are fresh. Still we got a confirmation institutional order flows are not consumed. As long as they are fresh, you can plan your trade again and again. So Monday you got the trade, even though market is down, after prices entered into the zone, again sharply moved. Which is on 75 minutes. See, this is 75 minutes type 2 entry. This one has given 75 minutes type 2 entry. Now I am seeing this whether the zone is successful or not. And after that, you see, prices again reached the 15 minutes, all-time high zone. Now this time, all-time is violated and further moved up. Now a new all-time is created. After that, it came down. But before that, it reached the all-time high target. When it happened on Thursday, it reached all-time high target. If you would have taken a trade at this type 2 proximal, how much profit you would have got? What could be the RR you would have got? First, let us see till the all-time high, what could be the RR? Assume this could be your entry. And stop loss, definitely this is not a 75 minutes time frame stop loss. Let me roughly calculate. Of course, I am using today's ATR, but actually you should use last Monday's ATR. But ATR values, you may not see huge differences. So that's why approximately let us understand. Chambal fertilizers, right? There is Chambal fertilizers here. CHA. Yeah, here. Chambal fertilizers. This is a daily ATR value, and this ATR is for daily entry zone, and this ATR is for 75 minutes entry zone. So 2.38, the round value is 2.4, 2 rupee 40 paisa. And what is the low of this 75 minute zone? The low is this candle's low. 524.55. 524.55. 524.55. Oh my God. $524.55 minus, what is the value? 2 rupee 40 paisa. 2.40. So 522.15 could be the stop loss. 522.15. This is the value. So your stop value is 522.15. So this is the stop loss. Did you observe here? We are not using 3% ATR. We are not using 5%. Why? 3% ATR is for 5 minutes entry zone. 5% ATR 15 minutes entry zone. And 2.38% ATR is for 10% ATR. This is for 75 minutes entry zone. And 15% ATR for daily entry zones. This is how you will be using ATR values. Okay. And what about your entry? This is the type 2 proximal. This is your entry. And how much value it reached? Till here. All-time high. You got 1:3 RR. So RR point of view, perfect. No issues at all. Minimum 1:3 RR is satisfied. Of course, if you are a highly experienced person, you can still accept 1:2.5. But all you people are learners, so don't go below 1:3 RR. If above 1:3 RR, you have to reduce. Suppose if the RR is less than 1:3, adjust your entry. Take deep entry. Of course, you may miss the trades. But if you get a trade, at least you will be a lucky person, right? So that way you have to plan your trades. So type 2 proximal of your 75 minutes, your trade. If the risk is beyond 2%, you position size and then you plan your trade. At the time you will be missing trades in F&O. We are a high value investor. You buy a lot of F&O lots. Then you can fine tune even in F&O. But we retail traders, we buy only few, 1 or 2 or maximum 3 plots. So what we do, we will position sizing F&O is not possible if the risk is beyond 2%. You may get deep and you can plan trade. At the time you will be missing trades. These problems will be there. That's why properly you should do risk management. Okay, for now we are performing the we are checking the performance of this bullish trade setup. So your trade is executed here. Sorry, deleted this, right? Okay, fine. How much profit you would have got? Your entry price is 534.50 and your profit is 574.05. Let us deduct these values. Minus 534.50 entry price. You got 39.55 rupees profit on each stock. Suppose if you would have invested in F&O, let us assume the risk management is within your control. Mostly you may not be having here, I'm sure, F&O, but you are a high value investor. So you manage it that way. For one lot, how much profit you would have got, let us calculate approximately. Then only we get maza, right? If you see the profits only, we will get. So which one we have to use? Zero the margin calculator. And the name of your stock is Chambal Fertilizers. Approximate value we calculate. Say, suppose assume you last week you would have purchased 27th March future, let us assume. What is the lot size? 1900. So into 1900, you would have got 75,145 rupees profit. What is the last lot cost? What is the margin cost? It is 2,69,224 rupees. That is the current price. Okay, current price is almost the same of this your zone. Moreover, there won't be much difference. Mostly the same value, maybe 100 or 200 rupees difference will be there. 75,000. How much ROA you would have got? Into 100 divided by 2,69,000, say 225 rupees. You would have gained 27.9% ROA, close to 28%. Round value I am saying. 28% ROA you would have captured. Within how many days? When you would have got the trade? On Monday you got the trade. And when you book the profit? On Thursday. Wednesday is a holiday. Monday, Tuesday and Thursday. In 3 trading days, you would have got 27.9% ROI as per one futures margin cost. Isn't it amazing? That too happened on a bearish week. See the bearish week. How sharply Monday prices go down sharply. Tuesday and Wednesday price moved in a narrow range only. There is no much movement. See base candles. And Friday, how sharply prices came down on Friday. Remember Friday. Why I am saying Friday? There is a reason. I'll come back to that. Do you agree? Friday it's a very bearish day. Many people are afraid of trading on this. Because it is a bullish trade setup stock and because it is a 75 minutes high liquidity zone, on Friday, prices entered in this fine-tuned 5-minute zone. And if you would have planned an intraday trade on this zone, why intraday trade? Because this is a 75 minutes high liquidity zone. You may say, anyway, our software did not identify this stock as near the zone. Yes, near the zone it did not identify, agree. But it is a bullish trade setup. That way you can give some relaxation to that rule. You can give more priority even though it is not stock near the zone. But price reached this zone. You may ask, is it morning 9:15, 1 minute candle? If that is the case, you can't take a trade. You may say, okay, let me go to 5 minutes. When you got the entry? Morning 9:45 minutes candle. So definitely you would have taken a trade here. After that prices were moving up till 10:50. It was moving. Till here, how much RR it captured? Let us look into this. This is we are planning. Let us assume the 5 minutes trade we are planning. Let us assume the intraday trade, our HLQ zone trade. So that's why I'm giving only that intraday related some buffer, stop buffer I added, approximate value. And where is our entry? Your entry is on this 5-minute zone. And up to where you want to calculate till the maximum, how much it has given, just we are seeing. See, it has given 1:7.8 RR it has given till the maximum on the day. On Friday bearish day, market was down more than 300 points. How many points it was down on Monday? 420 points. 420 points. Market is down. And most probably morning at this point of time, market might be down by around at least 350 plus points it is down. When market is down, but our stock is bullish trade setup, Chambal Fertilizers is moving. How much return it would have given? Maybe you might have exited before, but I'm just checking the performance of our power of our high liquidity zones, especially fine-tuned 5-minute zone. On a bearish day, this is a bullish trade setup stock. Why bearish day? Market was down on Friday. People panic. Everybody commented like this is crashing, market is crashing. This is not the right time to buy. Everybody is shouting. At the time, our bullish trade setup, high liquidity 75-minute zone, the fine-tuned 5-minute zone. First time prices entered into the fine-tuned 5-minute zone, and how it pushed the market against the bearishness in the market. Still how it pushed. That is what the power of our high liquidity zones, how you should understand. See how much profit you would have got, maximum profit. You may say, how do I know exactly how to sell here? You may not be knowing. You might be selling a little before itself. Maybe after reaching 1:3 you might have exited, or after reaching 1:5 you are exited. Maybe using trailing stop loss you might have executed. Because it reached this candle, drop, base, drop. Of course, it is looking like ERC candle, but still you sense this is the area. Some activity might have happened at lower time frames. That way you could have exited. Let me draw a horizontal line here. So here you might have exited. That means exactly the maximum it reached. So that's why maximum how much it would have given on the day. Let us calculate entry price and your target price, profit level 545.25. Let us say this is intraday profit we are calculating. HLQ zone profit we are calculating intraday. HLQ zone strategy, lesson 21.3, what you land. That concept profit we are capturing. Even though it is a bullish trade setup, on a bearish day, how our zone performed, that is what we are calculating. 16 rupees profit you might have got. It is 1900 into 1900. You got 30,400 rupees profit into around 2 lakh. So when price reached this zone, it could be a little less compared to the current value. Maybe it could be at 2,68,000, maybe 500 might be there approximately, or maybe let me say 2,69,000 rough value. Even though somewhat slightly ROI is reduced, it is okay for us because approximately we are calculating. Into 26 again, already 34, okay. So into 100, 30,400 is it could be a profit into 100 divided by 2,69,000. You would have got 11.3% ROI on a bearish day. Is it not amazing? The power of our high liquidity zones. That is the beauty of high liquidity zones. Overall market during last week was bearish, but it already gave excellent WIT trade and reached the all-time high. All-time high is our target, final target. And it gave you at 5 minutes, again it gave you an opportunity to go for HLQ zone intraday trade. HLQ zone intraday trade. HLQ zone intraday trades always give very good ROAs for us. Maximum. I know you might have exited after getting 6% ROA. Some people might have captured maximum using some trailing stop losses. But maximum performance it has given. So that is the power of our bullish trade setup, high liquidity zones. Okay. This is Chambal Fertilizers. What about the other stocks? Looking into Bajaj Finance. This is also 75 minutes high liquidity zone. Let us go to the 75 minutes time frame. How our software identified this 75 minute zone as a rally, 1, 2, 3 base candles and a rally candle. Okay, risk management point of view, you might have fine-tuned up to type 2 proximal. If you would have fine-tuned up to type 2 proximal, maybe you might have slightly missed the trade, or if you add any entry buffer, your trade would have been executed on Monday. See, Monday is a bearish day. Because here you have a fine-tuned 15-minute zone is there, maybe you might have planned your trade like this. With the entry buffer, your trade would have been executed. Or if you take type 1 proximal entry, definitely your trade would have been executed on Monday. And after that, Thursday it reached all-time high. This is also all-time high stock. And all-time high it reached on Thursday. Suppose if I take type 1 proximal, do I get 1:3 RR? In case if I don't get, can I reduce the risk until I get type 3? Our trade would have been triggered. So that kind of adjustment, how you can do, let me explain here. Several times these techniques I explained in HLQ zone analysis everyday videos. But today let me explain. Long position. Approximately I am drawing a stop buffer. Let us assume this could be your stop buffer. And this is your entry. And this is your all-time high is the target. We are short of 1:3 receiving 1:3 RR. So what you do when you are having a shortage in receiving 1:3 RR, what you can do, you fine-tune the entry. It is an important technique. Fine-tune the entry. How to fine-tune the entry? Very simple. In this long position trading view tool, your entry reduce. Make it down until you get 1:3. See here, now we got 1:3 RR. So this is your entry. But with this approach, what is the disadvantage? Sometimes prices may not reach up to your fine-tuned entry level. Just a little before it will be started moving. That way you will be missing the trades. Anyway, you can't take the trade because you don't have 1:3 RR. That's why, anyway, you will be missing the trade because RR is not there. Instead of that, if you fine-tune the entry and try and check your luck is much better, right? Something is better than nothing. Now you fine-tuned, you are getting 1:3 RR. Now what you can do? You can plan a trade once prices reached. Does it reach? Yes. See, Monday what happened? Prices entered a little inside your entry. And then sharply it started moving up. Monday. What kind of day on Monday? Monday overall Nifty is down by 242 points. On Monday. But Monday, what happened in Bajaj Finance? Sharply prices moved on Monday. Of course, after that again it came down. Again on Monday, again at, this is Monday, right? Yeah, sorry. Monday you got the trade, sharply moved up. The whole Monday prices stayed above. Wednesday again. Thursday, this is Thursday, prices came down somewhat here. I think I made a mistake, sorry. This Monday is before our Monday. What is our Monday? This is the one. 24th February was Monday. That means this zone is already tested zone. We got an entry before identifying. our zone on last Friday. See, this zone is already formed. After that, prices entered into the zone and gave a trade. On 17th February, it gave the trade. Please check 17th February. We generated our report on 21st February, end of the day. At the time we identified this zone already gave a trade. That means earlier reports, 1 week back, who used our reports, NeoStock reports, they would have got the trade. But we missed the trade. Of course, they got the trade. Price did not reach the target. They are on the hold. Prices were moving. And last, again on Monday, 24th is the Monday, prices were again started moving up. Tuesday and finally, last Thursday, it reached the target. Sorry for my mistake. Okay, maybe you would not have got this trade opportunity, but the previous 1 week back, whoever is using our reports, NeoStock reports, they would have got the trade opportunity. But how many days they are in the trade? They are in the trade for almost 2 weeks. Almost 2 weeks they were in the trade. Probably 13th February, HLQ analysis, our NeoStock reports would have listed this stock as a bullish trade setup. And those people who would have got the trade on 17th February, they got the trade. 17th February. And after that, prices moved up and it was moving. 21st February again came close to this zone, but again after that, already people took the trade in this zone. And this recent completed this current week, it reached the target. So that's why swing trade, sometimes you need to hold your trades for 2 weeks or 3 weeks also to reach the target. Sometimes within a week you get the, see previously what happened? Chambal Fertilizers, within the week it reached the target. We got the trade on 24th February and reached the target on 27th February. This is a perfect trade we got. But Bajaj Finance, we missed the trade because already it gave the trade. We were just observing what is happening. And the last Thursday, 27th February, it reached. But when actually people got the trade? 17th February, they got the trade. Almost 10 days they waited to reach the target. That means in 2 weeks, it gave you the target. Okay, fine. And this is also high liquidity zone, 75 minutes high liquidity zone. And also high probability zone, this one. We identified Bajaj Finance, Chambal Fertilizers, Bharti Airtel. These are all high probability trade setups. Okay. Next, what about the next one? Hindalco. Look into the Hindalco. Hindalco is also a 75 minute zone. Rally, base rally. And the only problem we have seen with Hindalco is this is the zone not having high probability to get success. It is a low probability, but still it is a high liquidity zone. The power of high liquidity zones is many times these zones work irrespective of zone confluence. Of course, sometimes they will also violate. But this week, is it having a fine-tuned 5-minute zone? Yes. Where you can plan the trade, maybe in the type 2 proximal, or maybe if the risk is high, at the 15 minutes fine-tuned zone you can take. Exactly at 15 minutes fine-tuned. Even you have fine-tuned 5-minute zone is also there. That way you can reduce the risk in case if you feel risk is very high, if you plan the trade. If you plan, those who planned at the 15-minute zone, you got the trade. After that, your 75-minute zone is pierced. Look into the blue color line. This is the stop buffer. Price is a little above the stop buffer only. That means our trade is not triggered, stopped out. How we calculated this value? We calculated this value based on the values you have seen previously. Where? I think, yeah, Hindalco. Hindalco. Where is H? HI. Hindalco here. Hindalco 75 minutes, this is a 10% ATR, 1.80. 1.79 means rounded value 1.80. That is, and what is this value? Low of this zone, 618.80 minus 1.80. How much value will get? 617. 618.80 minus 1.80. That is a 617. See, this is the value 617. So this is within our stop buffer. After that, prices were started moving up. Probably you will hold until it reach this target, this 75 minutes target. Actually, it reached the target. When it reached the target on see here, target it reached. So this is 75 minutes supply zone. Initially, your trade is like this. This was your earlier target. This is our earlier target. This is a revised target because after you took the trade, then only candle is completed. This is our earlier target. Definitely you have more than 1:3 RR from this 15 minutes fine-tuned zone. You get 1:3 RR. Your trade is executed. And after that it reached the target when? On Friday. Friday, what kind of day it is on Friday? Look into the Nifty. A bearish day, Friday. But what happened in Hindalco? Even though the zone is still pierced, it moved up within the stop buffer. Actually, the reason why it moved so very strongly after it pierced, there is a trap, bear trap below this. This is the advantage of using stop buffers. The reason why we keep stop buffers. Stop buffers, many times institutions below our zone, they will keep some traps. Whatever the values we are calculating, within these percentage levels only, mostly institutions keep traps. That's why these standard values are identified. Now, if you go to 15 minutes time frame, you will see a bear trap. See here? You have a drop, 1, 2, 3, 4 base candles and a rally candle. Of course, this is having a fine-tuned 5-minute zone also. Look into 5 minutes time frame. 5 minutes time frame here. See here? You have a rally candle, you have a base candle, rally and follow through candles. See exactly the trap level it reached. This is the 5 minutes demand zone. See, from there it picked up the orders. Twice. This is the first time. Gave a big push. This is the second time. Gave a push. After that, prices up and downs will be there, obviously. Market won't move like a straight line, right? Moving up and downs and finally reached the target on Friday. Friday, all stocks are moving down, but Hindalco is moving up. Because institutions decided they have to push until its target level, 15 minutes target, 75 minutes target. This is 75 minutes entry. See, this is the 75 minute zone. Inside 75, we have a fine-tuned 15 minute zone. We have a rally, 1, 2, 3, 4, 5 base candles and a rally. Inside this 15 minute zone, again there is a fine-tuned 5 minute zone. See here, you have a rally, 2 base candles and a rally. So your entry probably either you take here, one possibility. If you feel risk, you might have taken a trade at 15 minutes level, exactly there. Fine-tuned 5 minute zone is also there. It might be a safest trade for you. That way, if you plan a trade, those people get good profits. Even the zone is pierced, still it is within your 75 minute stop buffer value. We are not considering 5 minute stop buffer value. when you consider 5 minute stop buffer value if you plan your intraday trade. But when you plan your swing trade, obviously below your 75 minute zone, you have to keep your stop buffer value. That is a 10% ATR value you have to keep. That is what you are seeing, the 10% ATR value. And the 10% ATR value saved your day, because within the 10% ATR value, there is a bear trap. And people who plan trades based on the bull and bear traps, probably they would have taken a trade in this trap area. They would have got even much better profit. And those who are not aware of all these concepts, you might have taken a trade at this risk, 15 minutes risk level. Suppose if you would have taken a trade at the 15 minutes, how much profit you would have got on Friday? So 636.25 is your target. This is the area minus your entry could be somewhere 15 minutes level, let us assume. So 620 to 40. How much profit? 13.85 rupees profit you would have got. And when you would have taken a trade, you would have taken a trade on this candle. This is morning 9:55 candle, 5 minutes candle on Tuesday, 25th February, Tuesday. And when it reached the target, 28th Friday, at what time? 14:45 we exited our trade. What kind of day on Friday? Bearish day. Bearish day, what kind of movement we have seen on Friday? A bullish movement. Initially, this stock also on Friday, it was down a little. See, Friday actually it is moving from here. This entire thing, price action is on Friday. Friday initially market is down somewhat. After that again started moving up from 10 o'clock. Again some profit booking at 12:25 till 12:40. Again prices were started moving until finally it reached the target. This is the way Hindalco has given you 13.85 rupees profit. And how much ROA it would have got on one future? Let us see. Hindalco, say 27th March future into 1400. So you would have got 19,390 rupees profit. When you would have taken the trade? Here you would have taken the trade in this area. So current price closed. When prices are here, it could have been from the current value. The margin value could be definitely maybe another 1,000 rupees, might be less value might be there depending on the current. Yeah, definitely 1,000 rupees less value might be there. Maybe it could be, maybe if not 1,000, let me say 820, round value let me keep, divided by 1,78,000. So into 100 divided by 1,78,800 rupees. Sorry, 78,000 rupees, not 800. 1,78,000. You would have got 10.89. That means close to 11% ROA you would have captured. Short-term income trade. Within how many days? Within 3 trading days. You got a trade on Tuesday, next Wednesday holiday, Thursday, second trading day, and Friday, third trading day. Within 3 trading days, it reached the target. But it reached the revised target. Your earlier planned target is this is the one. Why revised target? Because a new 75-minute zone is created here. Drop base drop. Whether you achieve or not, you don't bother. See, till your initial plan is this one. You have good RR from here. Till here, you may not be having 1:3 RR. But because already you took trade. Once you took the trade, you don't bother about RR. You bother about target zones only or revise the target zone. Once it reached, you just exit and book the profit, whatever the profit. Because this 75 again pushed the prices down. Moreover, this zone is already violated. Next time maybe sharply even the bear trap also might be violating. Who knows? Maybe it may give one more trade, possibility is there, or it might be violated. We never know. Already it gave 2 tests. This is the first trade and this is the second trade from the bear trap. Okay, the only one trade that is we got with good order flows is Bharti Airtel. This is the trade you would have got losses. Bharti Airtel, actually it is the having all positive parameters, all high probability parameters are there. It is having a LTF, ITF, HTF zone confluence. It is having HTF EMA confluence. Everything it is. Even excellent institutional order flows. Go to 15 minutes time frame. See here. 15 minutes. You have 15 minute zone is there. You have a drop base rally. Within these 15 minute zones, it is having a fine-tuned zones, fresh zones. When fresh zones are there, you get multiple trade opportunities. Here a zone is created, but a 15-minute zone, it is not having a, see here, failed ERC, base rally, it is tested and moved up, but you can't plan this trade because it is not having a fine-tuned 5-minute zone. Anyway, so all these are all violated. So if you, wherever you plan the trade, maybe at the type 2 proximal or in the fine-tuned area for the risk management, where is 75-minute zone here? This is the 75-minute zone. We have a failed ERC as a rally, 2 base candles and a rally candle. This is the 75. After that, LOTL zone is also created, drop base rally. That's why mostly you would have planned your trade in this area. So this is the value, whatever the risk with some stop buffer, 10% stop buffer, you might have got the loss. Of course, you might have fine-tuned to 2% risk level, or you would have done the position sizing. Your risk won't exceed beyond 2%. That is the rule, we never deviate. But the only problem is you might have, your trade would have been stopped out. Bharti Airtel, this is the only one. What about the remaining 2? Remaining 2 or 3? 3. Remaining 3, as per the lesson 16 concept, you know those zones will be violated. Look into the Muthoot. Drop base rally. This is how our software, this is a C_DZ high liquidity zone. Drop base rally. Go to the 15 minutes time frame. See the 15 minutes time frame. Now you look into these candles. A rally candle, drop candle. This is a big candle, drop candle. After drop, there is again a rally candle with a hidden body. So this is a big candle, drop. After that, again a rally. If you see, all these are looking like a base candles. But even if you feel all these base, 1, 2, 3, 4, 5, 6, 7, 8, 9, so many. Or if you consider this as a drop, remaining all base 1, 2, 3, 4, 5, 6 base candles will be there. If you think like that. But the moment you hide, you see the large candle here. Drop candle. So that's why understanding this candle structure with hiding the hidden bodies are very, very important. Because of these gaps, your scaling will be reduced. Because scale is reduced, all these candles looks like small candle. That's why in every HLQ analysis video, I suggest the people everyday HLQ analysis videos. But in future, in case if I stop everyday HLQ analysis videos, at the time you will be following training lessons. At the time you listen this video and you have to learn this technique. See, many times in trading view or any other charting applications, the biggest problem is when there are the candles are very big candle is there. To represent this candle in the chart, they reduce these scales. See the scale? The moment you reduce the scale, all candles will become small, small candles just because of this one candle. So the technique I am teaching, just hide that big candle. Then you understand the real structure of the remaining candles before that. See now scale also you see expanded. The moment scale is expanded, now you are seeing the real structure of this candle. See, these are all the medium size small candles. This is a large candle. This is again a drop, even bigger than this, including the wick. So that's why this is a drop candle. And this is a rally candle. In between, no base candle. There are higher chances that this zone will be violated. That is how you should understand. Suppose you are convinced that is a 15-minute zone. Now 5 minutes fine-tuned, you get the clarity. See, in the fine-tuned 5-minute zone, again these candles are large candles. See here, you have a rally candle, you have 1, 2, 3 base candles, you have a drop failed ERC candle, then follow through candle. That means you have a supply zone here, not a demand zone. After that, again there is a big candle. So where is the base? Suppose you consider, I want to consider all these small candles. See, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Lot of consolidation here. So that is also confirmation. This zone will be violated. So whatever the way you think, this zone has to be violated. So that is the reason why we should not plan a trade in this zone. There are higher chances this 75-minute zone will be violated. As per the concepts you learned in lesson 16. Go to 75 minutes time frame. See, the zone is violated easily. Even if you consider a trade, see, the supply zone is also very immediate. You may say, I may take a plan type 2 proximal. I get maybe RR, 1:3 RR from here to here. Still you can't take a trade because this zone is not having a proper structure. So this is how you should understand when a zone. See, finally zone is violated, but institutions cleverly, you know what they did? They set a trap below this 75-minute zone. Go to 15 minutes time frame. Below this zone, here they kept a trap. 5 minutes level it is clear, not 15 minutes level. Go to 5 minutes. Now you see the trap. Rally, 1, 2, 3 base candles and a rally candle. This is the 75-minute zone, high liquidity zone. And this zone, we know that this zone will be violated. Many people are not aware this zone will violate. They plan the trades, but institutions cleverly, they kept a trade. This zone will be violated. That is what happened. Zone is violated. And all who plan trades in 75 minutes, somewhere here, maybe just before the zone, entry buffer before the zone, probably your stop loss might have been triggered. The moment the stop loss is triggered, all will exit, and in this zone, they are just simply capturing all the trades, and then they push the price up to the 75 minutes target zone. See how much profit they would have got. Monday you got the trade, and Tuesday you got reached the target. Definitely from this 5-minute zone till the 75-minute zone, there is a good RR will be there. So that's why you should be very careful, because you know when a zone will be violated. But you are very well aware of these traps. At the time you can take some risk and plan your trades. Okay, this is about and similar case sale also. Sale is even much clear. The zone will be violated. Why even much clear? Look into the 15 minutes time frame, you will understand. See? Rally candle. Now you tell, clearly you tell this zone will violate. No base candles here. That's it. That is what happened. Zone is violated easily. Same is the case with MCX also. MCX, you see, you have a drop candle, you have a rally candle. The drop is a big candle. Hide the bigger candle, big candles, you will understand. Now you see, this is a failed ERC as a leg-in. You have a 2 base candles. You have a drop candle. You have a supply zone here, rally base, a drop. After that, again a rally candle. Drop candle, rally candle, in between no base candles. Such kind of zones has to be violated. And before that, you see, so much of consolidation took place in this zone. This is a 75 minutes TCO zone, low priority, high liquidity zone. So easily zone is violated. This is what happened to all the three zones, MCX, SAIL, and that's why the checklist items I mentioned, why we all should look for is the entry zone is having a fresh fine-tuned 5-minute zone. Why we are looking for in the swing trades? Not for taking the trade at the fine-tuned 5 minutes. We take trade before itself. At 15 minutes level zones itself, we will take trades if you want to minimize the risk. We don't go up to 5 minutes fine-tuned because many times we miss the trades. Because bullishness is very strong in the market, it won't let the prices reach up to 5 minutes level. Only intraday trades only we plan at 5 minutes level, fine-tuned 5 minutes. But even then, why we are checking the fine-tuned 5 minutes? Because lesson 16, you land when a zone can be violated. Because of those concepts only, you identified both Muthoot Finance, SAIL and MCX, the zones will be violated. Because the candle structures are not good. The 15 minutes, you have a drop candle, you have a rally candle, in between no base candles. So zone will be violated. Okay, this is what the performance analysis of the zones we identified during last weekend. Hope you understand its power. Okay, now let us generate bearish trade setups and we will see the analysis. Okay, how do we from our NeoStock software? For bearish trade setup, entry time frame is 75 minutes. For weekly income trade, weekly is HTF, daily is ITF, and 75 minutes is LTF. LTF means our entry time frame. Okay, entry zone should be supply zone because it is bearish trade setup. And in bullish or bearish trade setup parameter, at 75 minutes time frame, we have to select bearish. And 3 filters we have to set on 75 minute supply zone. First filter is the 75 minute supply zone should have an achievement, violated opposing zone. The second filter, minimum odd and hands score. It should be 12. For any bullish or bearish trade setups, minimum value should be 12. But this 12 value we are applying on 75 minute supply zone. Supply zone should have, 75 minute supply zone should have a minimum 12. Odd and hands score should be there. Okay, only such kind of stocks we want. What is the third filter? Third filter is our 75 minute supply zone should not be pierced zone. So let's go to the pierced zone, pierced count property. See here we have a pierced count. So at which time frame? 75 minutes supply zone. The minimum value should be 0, maximum value 0. What does it mean? It means the pierced count should be 0. Pierced count 0 means the zone is not pierced. If zone is pierced, the count will increase. So that's why we are saying the pierced count value zeros. Okay, with these filters, all the 3 filters we apply on the 75 minute supply zone. Oh, we got 25 stocks. My God. It is very hard to analyze all 25 in this video. But anyway, 25 stocks we got which are supporting bearish trade setup for weekly income trade, and entry time frame zones are 75 minute supply zones. So these are the first 15 stocks generated by our software which are supporting bearish trade setup. Let me scroll the list down. We got 25 stocks total. because time is very less for us, what I do, directly I will go to high probability trade setup stocks. Of course, high probability by default HLQ zones are high probability trade setup stocks. Here we have so many HLQ zones are here. So many HLQ zones we have. But analyzing all these zones are not practical for in this recorded video. Lot of time it will take with explanation. So that's why what I do, directly I go to the most high probability trade setup filters. What is high probability trade setup filters? LTF, ITF, zone confluence, and ITF EMA confluence. Let us see how many we get. So I am going back. I am setting the filters, two filters. First filter is LTF, ITF supply zone confluence. What is LTF? 75 minutes. What is ITF? Daily. So 75 minute supply zone with daily supply zone confluence. I am enabling this filter. If I enable this filter, how many stocks we got? We got 18 stocks. Still it is a big number. So that's why I want to further filter, even adding one more high probability parameter, EMA confluence. So that means your 75 minute supply zones, all these 75 minute supply zones are part of the daily supply zone. And if the daily supply zone is having daily EMA confluence, then these 75 minute supply zones are having more probability to get success. I am not saying they success. They have more probability. So that's why I am adding one more parameter on these filtered stocks. What is that? In the EMA confluence at a daily time frame. And moreover, daily trend is down in all the stocks. Why? Because it is a bearish trade setup. So that is another advantage why we are setting this filter. Because in the sideways trend you can't set EMA, right? So that's why downtrend, all daily trend stocks are downtrend. ITF trend is always downtrend in bearish trade setup. And what is the filter I am selecting? Daily supply zone having daily EMA confluence. Only those stocks I want. See, now it has given you 9 stocks. From these 9 stocks, now you can analyze. Still 9 is a big number. But high liquidity zones, how many we have supply zones? We have, this is the first one, this is the second one, this is the third one, this is low priority, already tested. This is the fourth one, this is the fifth one. We have 5 stocks. Let me quickly draw these zones and let us check what is going to happen. So BHEL, because I am deleting these stocks, we already completed our discussion. Now let me register with the new stocks starting with BHEL. See, because time is not there, this is I think something long back we have drawn. I am removing these filters, removing these 2 drawings. Okay. So what is the zone? It is suggested. High liquidity zone, 27th February at 11:45, 2 base candles. So 20 February, this is 11.2 base candles. Now you see hidden body. If you add the hidden body, this is a drop candle. After that again follow through candle. See how beautifully our software identified these hidden zones. This is 125 minutes supply zone. This 125 minute supply zone is part of the daily supply zone. Go to the daily time frame. Light color I am giving. Go to the daily time frame. In the daily time frame, probably it consider this is the drop candle. This is a drop. This is a base. Medium size candle. See, this candle size also almost same as the base. Then with hidden body, again a drop big candle. So probably our software identified like this. Let me give weekly color. That is even much lighter. Okay. Okay, this is daily supply zone. This daily supply zone is having 75 minutes supply zone confluence. But here we have a risk. What is the risk? In case if there is one more 75 minute zone, if this is violated, we got a trade opportunity. That is what we discussed in lesson 27. In lesson 27, I explained these strategies. There I explained when a zone is having a fine-tuned zone, the 75 minutes is the fine-tuned zone in daily. It is having high probability to get success. At the same time, it is also having a disadvantage. What is that? If this zone is having one more 75 minute zone, if this is violated, the next one will be getting chances to get success. Because still trend is downtrend only. When trend will be changed? If daily zone is violated, trend will be changed. LTF zone violates, trend won't be changed. Daily zone has to be violated. Now let us go to the daily. Let us check any 75 minute zone is here. Yes, there is one more 75 rally based drop. That means you have to analyze both these stocks. Both these zones, not stocks, both these zones. You have to analyze this 75 minute zone and also you have to analyze this 75. And moreover, this 75 minute zone is also having daily EMA confluence. Go to daily. See? This 75. That's why we should be very careful. This trap, this kind of trap, sometimes you take a trade, this will violate and you will exit and you leave. After that prices reach here, from here it will come down. This is the only one disadvantage in this technique, zone confluence technique. So that's why I told this technique, this kind of practical issues in lesson 27. So everybody go through lesson 27 in case if you did not. The strategies I taken care of all these issues. But only thing is how well you are learning is the most important. Software displayed this. When this is violated, next our software will identify this. See, software always identifies the most nearest one to the current price. This is the nearest one, the opportunity. The other one, the concepts you learn, demand and supply zones, you have to identify. See, this is the one software identified and this is the one we identified. Of course, this one software identified later stage. After this is violated, then our software identify. But same day, if this zone is violated and it reaches here and gave a trade and came down, before software identifies, we will be missing this trade. Now you analyze it, right? That way you will identify these trades. See, this is one good important lesson you learned from this video. Of course, you already learned it in lesson 27. But this is software generated reports we are analyzing. As part of that, you once again you learn this point, or maybe it is like a revision for you if you already learned. This is how you should analyze the stocks. Of course, this 75 is having more probability compared to this 75. It doesn't mean it is having less probability. No, still it is powerful. Next time prices reach and from here it will come down. Moreover, if Nifty is very bearish, prices may not reach up to here. It touch and it will come down. There is another possibility. Maybe tomorrow, a base candle, after that again a drop candle, the daily zone is created and this daily zone is no more valid. You can't use this for a bearish trade setup. Why? Because if this daily zone is violated in case of the newly created, say let us assume drop, base, drop, a new daily. If that daily is violated, now you are referring our software report, prices reaches here, trend is changed to sideways. Today the trend is a downtrend. Maybe one more daily zone creates, that is violated and then price reaches here, the trend will be changed to sideways. At the time you cannot use this zone as a bearish trade setup. Already this point I clearly explained in daily income trade videos. That is lesson 21.2.1 or 2.2. That's why I told all you people must go through those videos, daily income trade. Because you have seen practical examples. I think the second video of daily income trade analysis in our lesson 29. Please go through that video. I explained when this zone will be invalid zone. Let me repeat in case if you don't listen the daily. Suppose this is a drop candle. Tomorrow a base candle is created and daily time frame. And then after that again a drop candle is created. That means a new drop base drop is created. The moment a new drop base drop creates, that means a new daily supply zone creates. Anything. It can be rally based drop, anything maybe. Or drop based drop in either. Any new supply zone creates. This existing supply zone is an invalid. That means it got expiry date. Your trade should be focused only on the newly created one. Suppose if the newly created one is violated, trend is changes to, daily trend is changed to sideways. By the time prices reaches here, this trend is sideways. You can't use these zones as a bearish trade setup. Maybe you can use them as a sideways trade setup related strategies. But those strategies are different. And you are yet to learn those strategies. But a bearish trade setup, it will be disqualified. So that means this bearish trade setup is valid as long as a new ITF zone is created. I mean not created. Until it is not created, this is valid. If a new ITF zone is created, this is invalid. So the expiry date will get. When a new ITF supply zone is created, this zone gets the expiry date for bearish trade setup. Hope I made it clear. Okay, this is about BHEL. This is zone ITF and HTF confluence is there. Next one is a BPCL. This is a normal zone. Still, you please analyze this stock. Now time is very less. I am not analyzing. You please analyze. Still, it is a valid stock. This also may work very well. There is no rule that only high liquidity zone should work. This is also supporting bearish trade setup. Who knows? All these high liquidity zone supply zones will violate. This may work very well. That possibility is there. That's why you should not disrespect this zone. You have to respect. But why, you may ask, why I am focusing only high liquidity? Because we have very less time. So I don't want to waste my time by analyzing all the stocks. Okay, Conquer. So when is this zone created? Conquer on 25th at 14:15, two base candles. 25th February, 14:15 at 75 minutes time frame. – 25th to 14:15. Is it 25 to? No, 27. Where is 25 to? Here. Yeah, here we have a drop, two base and drop. This is how the software is. This is 75 minutes supply zone. And this 75 minute supply zone should be part of the daily supply zone as per our software. Let's go to the daily time frame. Yes. Maybe according to our daily zone, maybe this is the drop candle, hidden body, you see. This is a drop candle, base candle, second base candle and a drop candle. That way you might have created our software. Or maybe our software might have considered, maybe after adding this hidden body also, still may not be qualified as a, leg candle. Then it will consider rally 1, 2, 3, 4, 5 base candles. Maybe this could be correct. Why? Because now it got even daily EMA confluence also. That means this is the daily supply zone. Inside daily we have 75 minute supply zone, here daily. But here you should ensure there should not be any new another 75 minute supply zone. Let us check. Is there any another 75 minute supply zones here? Yes. We have another drop base, drop failed ERC, dynamic view, it is a drop candle. If that is the case, you have to draw a zone like this. Drop, base, drop. This is another 75-minute supply zone. So that means we have two supply zones here. A drop, base, drop. Again drop, base, failed ERC as a leg out. With a dynamic view, it is a drop candle. And body came out of the candle, not near to the zone. All conditions satisfied. So we have to, now you go to the daily. This supply zone is also having daily EMA, this supply. But anyway, daily is having EMA, that is good enough. See, it doesn't mean every time these zones will violate. In case if this is violated, next you should plan your trade in this zone. That is what I am trying to say. One of these zones definitely will work. At least, I should not say definitely. There are higher chances one of them may work. Higher chances. Sometimes both also will violate. If all of a sudden market trend is changing, dynamics are changed, at the time all supply zones will violate and prices will be moving. At the time, definitely we have to accept stop loss. That is the only one condition. During the trend changes, the bullish or bearish trade setups will be violated. During trend changes, overall market trend changes. But otherwise, they work, they give good trades. This is a conquer, and the next one is this is a normal supply zone. You please analyze. But still it is a good setup, because this supply zone is having overlapped with the daily supply zone and also having daily EMA confluence. Look into this daily, already tested 2 times. MGL. Maybe, I don't know, you get again another 3rd time opportunity. If you get 3rd time, you will be lucky, right? Okay, MGL, go to the MGL. This is 75 minutes we have to go. Here probably MGL daily we have some base candles, a drop candle. This could be the daily zone. This is the daily supply zone. Probably inside you might be having, because this is also having EMA confluence, right? Go to 75. In the 75, probably here you have, definitely this is not probably here any drop, something wrong here. Okay, what our software suggested, how 21 to 9:15 4 base candles. 9:15, so software considered this as a medium size candle. Okay, I am feeling it is a large candle, but software considered medium size. So let us draw. But I am not fully happy with this. Maybe narrowly, this could be, candle could be at the border level. Border means maybe it is a large medium size candle. If it is little bigger, it could have been a large candle. Maybe that kind of conditions. But manually I will consider this as a rally candle only. On 25, 75, sorry, this is okay. So this is the 75 minute supply zone. But to be honest, I am not convinced with this candle. Software maybe, see, software just follows the rules, right? Maybe among the medium size candle, this is the largest medium size candle. Maybe a little bigger, software immediately might have considered this as a large candle. But we as a human, we take best decision in such kind of situation. I consider this as a rally candle, drop candle, in between no base candles, this such kind of zone I don't prefer. Mostly 15 minutes we get, but 15 minutes we have excellent rally base drop. A fine-tuned zone is there. Let me go to 5 minutes. 5 minutes also you have rally base drop, but I have ERC candle or something. Let me hide. This is a ERC candle. ERC, see, this candle is as bigger as this candle. rally. So maybe such kind of zones we should not consider. But anyway, software calculations are much accurate than the human way of calculations. But anyway, this is I have some doubts in my mind about when other zones are there, such kind of zones I ignore. If you ask me personally, when other good zones are there, I will ignore. If no other choice, then I will try my luck in this zone. Otherwise, I will ignore this stock. But how it is going to work, we will see only next week based on its performance in the coming week. Go to the daily now, you will see this zone is having a daily EMA confluence and overlapped inside this daily zone. Okay, anyway, this I will mark not comfortable, but this zone already gave 2 tests. 75-minute zone. Already gave 2 tests. Where? This is a drop. Where is? First of all, did I drop proper zone? This is 27th February 14-15. February 9-15. This is 21st February 9-15. Wow, great. This is the 21st February 9-15. Where is 21st February? This is the one. Drop candle. 1, 2, 3, 4 base candles drop. That's why I am wondering how this zone is created. Actually, I doubted my software, how it is created. By seeing, because I am fully convinced it is a rally. How it gave, I was wondering. So here the zone is a drop, 1, 2, 3, 4 base candles and with the drop. This is a medium size candle, part of the base, this is okay. And with hidden body, this is a drop candle, big candle. And this is a failed ERC as a drop candle. Hidden body, dynamic view, it is a drop candle. So this is a perfect 75-minute zone. Thank God, at least by seeing the test, I got the doubt. See here, it tested 2 times. This is the first time and this is the second time. So this is the 75 minutes supply zone. This 75 should be inside a daily supply zone. Where is the daily? Maybe these 2 candles and drop candle. That's why they considered it as a daily zone. It's overlapped at the distal line. It is overlapped at the distal line. Lower time frame zone as an horizon. Probably. This could be a daily zone. When time is very less, we make mistakes. Okay. LTF. Lower time frame horizon to the higher time frame. Probably more strong order flow will be there in this area. Okay, this is MGL. And next one is TCO supply zone, low priority. You please draw this one. Next, high priority. Tata. These are the new Patanjali, Tata Tech. They are all added this week. This month only they added. Few days back, these 2 are added. Okay, Tata. This is all-time low 75-minute supply zone. It doesn't have any demand zone. Moving towards ATL. When it is 25 February 9-15, 4 base candles. Again I added MGL. Tata Chemicals. Tata Technologies. This is the one. Rally 1, 2, 3, 4. Drop. Is that the one it has given? Yeah, 25th, 9:15 is the leg-in. Is it 25th? Yes. See, at the hidden body, this is a rally candle. 25th. If you add, it is a rally. See here, is it rally base drop? Yes, RBD. In rally base drop, the highest of the leg-in also you should consider. That means your zone will be like this. This is how you should draw your zone, 75-minute supply zone. But I am drawing daily zone, right? This is 20 February. Oops. Making mistakes again and again. This is a daily zone we have drawn. Okay, perfect. Anyway, daily zone. Inside this daily, we should have, let me change less thick, light color. Okay, this is a daily supply zone. Inside we have a 75 minutes zone. Let's go to the 75 minutes time frame. What is that? 75, 25th, 9:15 for base candles. Is it 25th, 9:15? Yes. This is a drop candle. No. This is not 25th, this is 20. That is what I am wondering. Where I am searching for, where is the leg out? If this is the base, leg out is inside the base. You can't keep such kind of leg out candles. I am wondering. This is 20th, but our software suggested 25th. See how many mistakes I am making today? Thinking I have very less time for recording further. But anyway, 25th, 9:15. Here we have 25th, 9:15, 1, 2, 3, 4 base candles, drop candles. Software is doing its job perfectly, but I am making mistakes. And finally, blaming my software. How it is developing such kind of zones. Okay, this is a 75-minute supply zone. This 75-minute supply zone is inside daily supply zone. Let's go to the daily. This daily supply zone is having a daily EMA. So it should not have another supply zone. Otherwise, if this is violated, next supply zone you have to take a trade. Is there any another 75-minute supply zone here? Yes, maybe. Here you have a failed ERC as a leg-in, but we don't know. Software definitely consider this also base candle. Because the reason is we compromise and we draw the zones. Software don't compromise. What is compromising? Even this is not really qualified as a leg-in candle. We compromise and we draw. This is a base candle. This is a leg candle, failed ERC. You have 1, 2, 3, 4 base candles and drop candle. Software may not compromise. If it considers this is also base 1, 2, 3, 4, 5, 6, that way it assumes. First of all, according to software point of view, if this is a medium size candle, it won't identify. So this is the reason why we should be very careful here. Except this, we don't have any other possibilities. I don't think software might have identified this zone. I think maybe according to software, maybe it could be a medium size candle. We convince this is a we can convince this is a leg out candle, but software I have doubts whether it will consider. But anyway, time being leave, we can really understand with whether here zone is there or not if we look into supply demand zone chain report. The last video we discussed the supply demand zone chain, not training video, the special video. Anyway, let us add this zone into our watch list. Next, any other high liquidity zone? We have one more high liquidity, Ultra Cement. In the Ultra Cement, when is the zone? 25th, 11:45. After that, 2 base candles. 25th. This is the one. 11:45, 2 base candles, a drop candle. This is 25th only, right? This is 27th. Tata Tech. This is 25th, 9:15. Where is 25th, 9:15? Yeah, this is the one. Sorry. Actually, our software identified this. Good, perfect. So it is qualified as a leg out. Then why it is not identified? Maybe software might have identified this as a large candle. This one, another large candle, no base candles, might have ignored this zone. So this is the one. This is the 25th February 9:15. Tata Tech. 25th February 9:15, 4 base candles. 27th 9:15, this is a leg out candle qualified. And maybe the size of this candle is almost same as the size of this large candle. That way it might have considered as a failed ERC candle. Definitely not a base candle. So that is the reason why it did not identify, because you can't keep large candles inside the zone. Maybe it is perfectly calculated, but I made a mistake. Initially we predicted this could be a zone. Again I doubted maybe software might not have identified this, but actually software identified this zone. I wrongly marked this a drop base drop. Maybe if you hide this large candle, you see the real picture of this candle. You see now? This is a big candle, right? Very large candle, failed ERC candle. This failed ERC candle can't be qualified as a leg out, because if you draw the zone, this failed ERC is inside the zone. You can't keep a leg out inside the zone. Leg out should come out of the zone. That is what imbalance, right? Imbalance and balance. The imbalance should come out of the zone. Okay. So this is the one. So sorry for my mistake. Now let me go to Ultratech. How I got doubt is here Ultratech is 25. This is also 25. I wondered. Ultratech is somewhere far away from current price. But earlier we drawn the zone near to the current price. That's why I got doubt and I went back to Tata Technologies. Okay, anyway, this is the drop, 2 base candles and a drop candle. This should be inside a daily zone. Let's go to the daily. Yeah, here you might be having a daily zone if it is a failed ERC candle and 2 base candles and a drop candle. That way our software might have drawn a zone like this. Drop base drop. This is daily demand zone, daily supply zone. Again and again mistakes. Okay. Having EMA confluence, let us make sure there is no supply zone here. No supply zone. This is base candle. You can't keep it as a leg out. So this is the only zone we have inside this 75-minute supply zone. So total how many? 4 we identified. 1, 2, 3, 4 and 5. Actually, which one I missed? BHEL, Conquer. After that, MGL. Where is MGL? Yeah, MGL is there. After that, Tata Tech. Tata Tech is also there. Okay, 5 is there, right? 1, 2, 3, 4, 5. How I counted this as 4? What happened to me today? 1, 2, 3, 4, 5. Perfect. And 5 zones. So this is based on LTF, ITF. Similarly, we can also identify more probability based on LTF, ITF, HTF and then HTF EMA confluence. So what I do, I'll go back, removing this EMA confluence filter, and in the supply zone confluence, I have to add 3 filters now. First filter is LTF, ITF filter that we already selected, 75 and daily supply zone. Second filter, LTF and HTF, that is 75 weekly supply zone. Third filter, ITF and HTF, that is daily and weekly supply zone confluence. With all the 3 filters enabled, that means LTF zone, 75-minute zone is inside ITF zone, that is a daily zone. Both together again inside HTF zone, that is a weekly zone. So daily and weekly, all 3 will be overlapped with each other. With that combination, now I am filtering. How many stocks we got? 7 stocks. All these 7 stocks. But still this is not enough for us. We have high liquidity zones, they have even more power because of LTF, ITF, HTF. But still we will filter based on HTF EMA confluence. What is HTF? HTF is a weekly. Weekly means HTF trend. But trend should not be sideways because EMA confluence does not work in sideways trend. It should be up or down. But here all are down because you won't get up in bearish trade setup. Bearish trade setup, you HTF, either you get sideways or downtrend. So we want downtrend supported stocks with EMA confluence. Which EMA? Weekly EMA. Why weekly EMA? Because 75 and daily together part of the weekly zone. That's why we are looking for weekly EMA. So in the EMA confluence, weekly time frame, I am setting the filter. Weekly supply zone should have weekly EMA confluence. Because our daily zone and 75-minute zone both are overlapped inside the weekly. And weekly should have weekly EMA confluence. At the same time, weekly trend should not be sideways. Because sideways EMA confluence does not work. So that's why in the trend, weekly time frame, I am selecting trend should be downtrend but not sideways. Why downtrend? Because it is bearish trade setup. See, the setup we selected bearish. That's why the trend should be downtrend. So with these filters, we got 3 stocks. In these 3, MGL is already we identified MGL here. Maybe MGL lower time frame zone horizon. Maybe that's why it is very powerful. Okay, MGL is having all 3. It should be inside weekly. Let's go to the weekly time frame. We are in the weekly. How it would have been identified? Maybe a drop candle, 1, 2, 3. This weekly medium size candle part of the base, and with hidden body, this is a drop candle. That way, weekly zone might be there. Maybe. This is how weekly zone might have been. Or this is also convinced as a medium size candle. Probably weekly zone will be like this. This is a medium size leg-in. In case if this is qualified as a leg-in. 2 base candles, medium size leg candle part, because this length and this length almost same. So medium size candle would be part of the base, and then a drop candle. Either way, it could have been happened. If we have any doubt how software identified, let's go to the weekly time frame. Let me open and let me select weekly. Let me generate weekly stocks. These are all weekly. Let me go to MGL. How MGL is identified? Where is MGL? Yeah, here MGL. Weekly supply zone. 27th 125 one base candle. Excellent. 27. This is the one. Rally base. LOTL zone. Actually, this is the LOTL. Inside this zone. But this zone came a little earlier because it identified this stock. Why? Because this, see, this wick is outside this zone. Our software always identifies the nearest zone. So that is the reason why it identified like this. Rally base drop. Inside we have this daily zone, and that is overlapped with 75-minute zone. See, weekly zone is having weekly EMA confluence. That's it. Okay, next, what are the remaining two? KEI. The KEI is not having daily EMA confluence. Tata Torrent Power is not having daily EMA, but they have weekly EMA confluence. MGL is having both daily confluence, EMA confluence, and weekly EMA confluence. So next one is a KEI. So let us draw this KEI. KEI Industries. 75 minutes time frame. When is the leg-in? Leg-in is on 25th 9:15 4 base candles. 25th 9:15 4 base candles, rally base drop. because it is a rally, highest wick we can consider. So this is the way I can draw the 75-minute supply zone. This 75-minute supply zone should be inside daily supply zone. Here we have a daily rally, 2 base candles and drop. So that way we can draw these zones. This is the daily zone. And this is inside a weekly supply zone. Where is the weekly? Let's go to weekly. Here you have a weekly zone, drop base, drop. So this is weekly. Inside weekly we have overlapped with. Weekly is having weekly EMA confluence. See, almost near. A small buffer, I told you last video. Small buffer we consider as this is having confluence, zone confluence. And having daily, see inside weekly we have daily. Inside daily we have 75. And see the 75 overlapped with daily and also 75 overlapped with weekly. But at the proximal line they are overlapped. That is okay. Zone confluence. Zone confluence need not be exactly in the middle. It can overlap with the proximal line or it can overlap with the distal line. Previously you have seen MGL, it overlapped at the distal line. That way we identified our lesson 22 concept. Lower time frame zone horizontal to the higher time frame zone. Okay. So this is about KEI, having weekly EMA confluence, not having daily EMA. So let us add KEI, weekly EMA confluence. And what is the last one? Torrent power. And torrent power, this is a 75 minutes high liquidity zone. When it was created, this is a normal supply zone, not high liquidity. But still we will draw because it is having all 3 time frames confluence. Maybe I am giving this work to you. Please draw this. Let it be ready. Because now I am considering only high liquidity zones. You please consider torrent power and you please draw. So this is how we do analysis. See, our analysis is very simple. And what else you have to do the work? The further work, what you have to do? The checklist. The checklist items, what you learned. Go through lesson 20. What you learned in lesson 20, everything they are available here or not, you need to check. Okay, fine. After that, what you have to do? Targets. Identify your target. After that, what you have to do? 1:3 minimum RR is there or not? After that, what you have to do? The 2% risk manage, are we managing or not? Either you can position size or you can adjust the entry. You can use different techniques. But risk should not be beyond 2%. So this is how you should plan your trades. By doing all these steps, you have to do all these steps. Because the major calculation I explained in DIT related trades, I explained. Repeating those steps again and again is a waste of time simply. So you have to do. Because every time I can't give you the trades. I can't. That is not, first of all, I don't have permission to give you the trade. You remember our disclaimer, right? So everybody should read this disclaimer. Every video I am keeping this disclaimer. Every video. In the video description, if you go, you will see the disclaimer. I am not a SEBI registered. That's why I can't give you any recommendations. I can't fine tune at 5 minutes level, or I can't show you at the exact entry, target and stop loss. If I am showing everything, it's like I am giving you recommendations. So I don't have permission. But you learn the subject, so you can find them. If you don't have that capacity to find on your own, you have to consult your financial advisor. And he should be SEBI registered person. Then you can take calls from him. My responsibility is to provide an education, and the software we developed, the software related services only I can give you. Not beyond that. Providing, and moreover, I am always against in providing the recommendations. First of all, I hate in providing recommendations. That is not a good approach. Why you also know? Because market is dynamic. When dynamic, many times targets will be changing. Your RRs will be changing. At the time, you should redo the analysis. The person who is providing calls, his job is just providing calls. After that, whatever changes, he won't bother. So that's why calls is not at all a good. Either you should learn the subject, identify your own trades on your own, or you should take advices from your financial advisor who should be SAB registered. That's why I'm giving this awareness to all you people right from the beginning. Hope you got it right. So that's why you please do the rest of the analysis. As a trainer, my responsibility to teach you the first time. After that, you should apply those concepts. So that way you find the entry, you find the target, you find your stop loss, everything you have to do. My responsibility is how best you can make use of these zones on your charts. That is what I am telling you. So that you are practicing all the concepts with the help of our software generated. That's it. But actual entry, target, stop loss, you have to identify from the concepts you already learned from our training course. So this is the end of the video. Hope this video would be helpful to you to learn our usage of our NeoStock softwares. So next video we will look into the next video in the probably next week. Okay, I'm taking a break here. I wish you all have a good day. See you all again. Thank you.